All right, my guest today is Top Lim, the co-founder of FinHero. For those of you who don't know, FinHero is a fintech solutions provider operating a finance as a service platform ranging from credit scoring, KYC, collections, and even supply chain financing. Thank you very much for being here today, Top Lim.
Thanks, Kevin. Thanks for having me.
Excellent. So take me back. I always want to know the origin story with entrepreneurs. So how did you start along the entrepreneurial journey, and how did you land upon FinHero as the company that you wanted to start?
Sure. So Kevin, I talk a lot. So if I'm boring, just stop me. So I'll just take you back to probably my corporate days. So just give you a bit of background. I actually came from the equipment financing world for most parts of my career. And I had the opportunity to work for a couple of the foreign banks. They were not retail, so you wouldn't know their brands. So they were CIT from America, and I worked for Macquarie for a while. And the last kind of stint in my career was with the Dell Bank, or Dell Financial Services. Yep. So when I was there, I did a lot of what I call in FinHero supply chain financing, which is ultimately providing terms for the distributors and dealers for the equipment, which was Dell predominantly, and also leasing, right? Equipment financing, which goes up to 60 months. So when I was working there, I was doing sales, so I was supposed to originate deals, and I always felt very frustrated with how long it takes to go through the cycle of getting some form of financing for these businesses. And then at that time, I felt, there was technology that I could use to kind of solve a lot of the functions and the problems I saw. And also, secondly, was, true story, I was having dinner with one of the Japanese funders that we were using, and he was retiring that year. And I asked him how long has he been working for that particular company. And that time I was still in my early 30s, and he told me 37 years. So that also got me thinking about, wow, am I able to work another? You
get the view into the future.
Yeah, exactly. So that night I couldn't sleep, right? So the combination of me seeing a lot of problems which can be solved with tech, I planned for it for a couple of years. When I left, my wife was actually pregnant with my second child, so I had to do proper planning, and then the plan was to solve the problems, and here I am today 5 years later.
Okay. And that must have been a little bit nerve-wracking to make the decision when you have another baby on the way. You already have one kid, to say, hey, I'm going to leave the stability of this career that I know that there's a predictable pathway, and I'm just going to go take a risk and start something. How was that, and how was the support needed from your wife and family?
So absolutely, Kevin. I mean, you can imagine, not to sound arrogant or whatnot. I left a top job, right? It was a regional portfolio for the Dell Bank. I think my portfolio at that time was about $1.5 billion per year. And I was taking care of South Asia, Japan, Australia. So I was the man in terms of equipment financing for Dell. Dell is a top-notch producer for IT. I was getting really good pay. I was, traveling in 4- or 5-star hotel versus a startup life where I had to start off in I think as bad as no windows, 50 ringgit room and all that, right? So it was a huge adjustment. But I think until today, in fact, just for lunch, I met an old schoolmate of mine. I said, I don't ever want to look back and wonder what if. And it was clear that I saw a lot of problems that could be solved. I also saw a lot of politics that I didn't really want to be involved with anymore. And I really do want to make a positive impact to the financial system and to society in general. So I do tell my team today that if we do any projects that don't have a positive impact, or you don't think have a positive impact, let's have a discussion, or let's not do it at all.
Okay. So you have a little bit more control over making sure that what you're doing is what you want to be doing, not what you have to be doing. Yeah.
Exactly.
Okay. Okay. So what was the starting point then in order to step off on your own? So what's the product? What does day zero of the product look like when you're just getting going?
Yeah, that was an interesting part. I think when FinHero ultimately set out, it was to be a digital equipment financing, so a digital leasing provider.
Mm-hmm.
Um, but of course, when you start out with the plan and when you actually step into the real world, you realize that, okay, what I really want to do is probably not what I can do initially, right? Because there's 101 problems that you got to deal with, like OPEX,
Mm-hmm.
cash flows, and all this kind of stuff. So to survive, I think what we had to do. Sorry. Number one was I think we had to make a very big decision in the first year after raising our seed capital amongst me and my co-founders, um, to just spend the money and build the tech ourselves.
Mm-hmm.
And then, the idea was to raise some form of investment to match with the tech that we built, so we can go to the market. But then the challenge came, and kind of like the problem we saw was, okay, it's not so easy to go and raise capital from the public and just lend to people, right?
Mm-hmm.
And then parallel, you have your regulation and all that. So that conversation with the SC, that was also interesting. But then we found out that for leasing and factoring, you actually don't need a license anymore for 2013 because it's a form of asset lending. But anyhow, the challenge was getting investment to the fund type to start lending. So long story short, we built the tech, we had the tech, right? So our proprietary engine is our OCR credit scoring. So we were able to analyze SME financials or corporate financials, in a few minutes compared to the traditional world, which takes, weeks or whatever it takes, right? So we had the tech. So we had to kind of pivot and then position the tech to so-called our early clients as, hey, why don't we white label our technology for you, right? You're already a financing institution or high net worth individual that wanted to do some form of lending, invoice financing, whatnot. So I can tell you our first kind of project was to support a high net worth individual who wanted to do invoice financing because he saw a lot of those problems as well. So we actually white labeled what we call finance as a service today for 15,000 ringgit. So that was my first kind of revenue, right?
And that 15,000 for what sort of period? That was a one-time fee. That was a monthly. That was an annual.
That was an onboarding fee, right?
Onboarding.
And I'm proud to say, well, our onboarding fee today is definitely not 15,000 because the tech we built cost a hell of a lot more, right? But we had to do what we had to do, right?
Yeah.
So that was the start, and then very proud to say today we're operating we've operated a P2P platform, so we've got experience in regulated environments. Our OCR engines, we do it for some credit bureaus in Malaysia and Philippines.
Mm-hmm.
And then we've rolled out our supply chain financing programs. We just signed a collaboration agreement like a couple of weeks ago with iPay88. So very happy, very excited to see what's going to happen in the next 12 months.
Okay, very interesting. So on the tech side, are you or one of your co-founders the technical co-founder that was writing the code, or did you end up having to hire or outsource?
Yeah, so that's always the big question for, I guess, co-founders such as myself who don't have technology. So I was fortunate enough to have one of my co-founders, Charles Tang, who's our kind of de facto CTO.
Okay.
To kind of build our tech. So from a company perspective, we outsourced the development, and his company built a lot of tech for us. But over the course of a few years, we've managed to stabilize that. We have other development companies that support us. So we have a relatively healthy ecosystem to support our projects for external parties and for ourselves. So we have a combination.
Okay. Okay. And so then the OCR engine, I imagine that companies are sending you like scanned copies or PDF copies of their financial statements. So you need something that can actually turn that unstructured data into structured data that you can actually analyze and cut down that human element and the time required to go through that sort of information. Yeah.
Yeah, absolutely. So that's a very big, I think, differentiator of FinHero versus what's out there in the market is,
Mm-hmm.
we do have that experience and that so-called formula and algorithm, right, to structure that data, whatever the OCR picks up. And I think that's a very key important factor, because I always tell my team is, or my clients is, my objective, one of the reasons why I left was I always found it very frustrating when, back in the days when I was working, selling, financing, the credit will always come back and ask for more information,
Mm-hmm.
right, from the SME or from the corporate over a couple of weeks, and then decline them, right? And then, we're funding the customer, so you can imagine what we had to deal with. So
Yeah.
I always tell today is, if we're going to decline somebody, decline them fast so they can go and
Mm-hmm.
look for other options. Because unfortunately, the reality is the way traditional financing institutions drag the decision and gives them hope, it could be a big problem for some of these SMEs.
Yeah, yeah, I can certainly understand that. I mean, there's an aspect of simply the time required for them to do the analysis, because the information is coming in a way that they spend manual labor hours. They're balancing multiple companies at the same time, so it's not one by one. It's
Yeah.
a little bit of my time here, and then it's over the course of, say, 2 weeks or whatever sort of course of time in order to finally turn it around. In which case, the borrower is thinking, it's locked up. They're doing this amount of analysis. And little do they know that it could end up coming out as a no, yeah?
Yeah, absolutely. And then the other thing also is I think a lot of the kind of delays or the inefficiencies in the traditional financing system is actually caused by humans, right?
Mm.
And naturally, because in my world we deal with ticket sizes in the 50,000 ringgit to 1-2 million ringgit ticket sizes.
Mm-hmm.
So traditionally, in the traditional finance world, when that kind of ticket size goes to a salesperson or a credit person, they purposely delay it. And I was one of those, guilty as
Mm-hmm.
charged, purposely delay it. So we make the customers feel that the importance of what we're doing, right? But actually, something that could be done manually in 1-2 days or whatever it is, they'll purposely drag it to a couple of days or a week just to give that extra value. But
Mm-hmm.
and it's also a lot of human kind of attributes which created these delays. So with the technology we've put in, it removes that, and it's much more accurate as well, because we can now do a lot of small transactions without having that emotional baggage
Mm-hmm.
to come in and analyze some kind of profile credit.
Yeah. Okay. And is the use case, if somebody's coming to you, are they looking to say like factor their receivables, either like an individual invoice or perhaps their entire book of receivables, or is it more on, help me finance this equipment that I need to purchase?
Yeah, so FinHero, our supply chain in particular, with iPay88, we focus on program financing. So we traditionally work with merchants of iPay88, where there's already some kind of historical data that we can
Mm-hmm.
look at, and also manufacturers and distributors to provide liquidity, to extend terms or provide leasing to their equipment. We don't traditionally entertain walk-ins.
Mm-hmm.
So if you're some ABC Sundaram Berhad just looking for some financing, and we don't have kind of data of your trade and there's no relationship, so we probably won't do those. So we focus on what we call program-based lending.
Okay.
And that's something that I picked up from my corporate days when I was working for CIT. I think CIT was or is still one of the largest and best vendor financing providers in the world today.
Mm-hmm. Okay. Okay. And so the data points that you gather from this relationship that you're setting up with iPay88, so essentially you're able to look down at it on this downstream, sort of what's the
Yes.
revenue, what's the consistency out of it look like, and then leverage that information to go back and do the vendor financing on let's say they're buying from a wholesaler of whatever XYZ good,
Yeah.
to be able to facilitate that side of it. So the payment terms are now matching up with the revenue collection cycle, and you have the data in order to kind of validate historically.
Yeah, absolutely. So I think we have to understand that the current traditional financing done by the banks mainly is collateral-based lending.
Yeah.
So what we look into is more of cash flow-based lending.
Mm.
So we have to understand all the cash flow revenues and what they come from. And with technology and our risk mitigation processes, we usually are able to deduct from the sales source, right? So very exciting. Sometime, hopefully in Q2 in April. As of now, we will be able to provide cash flow to iPay88 merchants based on their sales revenue and whatnot, and to be able to collect from source. So
Okay.
it reduces the risk significantly.
Okay. Now, with it being cash flow based, I'm going to make an assumption and assume that you're talking about more short term structures. Yeah, somewhere 3 months, 6 months, maybe even shorter, somewhere around that range.
Absolutely. So 90 to 120 days is a sweet spot for invoice financing. But I think the first that's going to be introduced in this region is also to leasing facilities, but deducting off the payments from the merchant sale. So that will probably be one of the first in the region, which I'm very excited to roll out.
Okay. Tell me a little bit more about that. So you're essentially going to take the merchant payments and be able to kind of redirect some of that payment flow in order to pay off, or how is it?
Yeah. So for example, just to give you kind of like a default case is, we look at a merchant and we understand that their sales revenue in the past 12 months is X amount. So we provide a loan to sales value of, let's say, 30%. So just for conversation purposes, their revenue is about $1 million a year, right? So we're more than happy to do an asset-based kind of lending up to 300,000 ringgit, right? And then they can choose to pay off their payments up to 60 months if it's leasing, and for invoices up to 90 days or 120 days, right? With exceptions. But the difference is because of technologies and the programs that we run, we will be able to deduct off the payments that are owed to us or the funder from their sales directly using the various technologies that we have.
Okay. Okay. No, that makes sense. And how many, out of curiosity, how many customers, how many borrowers, I should say, rather, are out there? How is this scaled up over time? And are they geographically dispersed, or is it primarily within Malaysia, northern, southern, all across? How is it?
So currently it's in Malaysia, but we hopefully will expand this offering to Thailand this year.
Okay.
At the very least. And of course, we're targeting Singapore, Indonesia, and Philippines in the next 6 to 18 months, right? Depending on how fast we can roll these out. Predominantly, of course, our main partner right now is iPay88. So they're the largest online payment gateway in Malaysia. And because they are now, I think, co-owned by NTT Docomo, so they also have various payment gateways in Southeast Asia. So we definitely hope to leverage off that program. But we ourselves also have networks with manufacturers and distributors focusing on the IT industry. So, we just signed up one of the largest Apple resellers in the country, and we hope to expand out our device as a service offering, which is a form of leasing. Throughout Southeast Asia as well. So the expansion roadmap for us in the next 12 to 18 months looks very exciting. Now it's just a matter of planning the resources, and hopefully the world remains predictive out of this COVID situation, and we can push on as how we want and how we plan.
Okay. Okay. Let me flip back towards those earlier days, because I think one of the challenges oftentimes is that kind of the cold start of getting up and running. So you got the tech built, all of that. Um, I'm gonna make a guess and say the aspect on the borrower side, there's always a pretty strong demand for capital. So finding somebody that wants to borrow is less challenging than finding pools of capital to then lend out. How did you go about in those early days? I know you talked about white label, you talked about P2P. How did you end up getting those initial steps? And was it as much of a struggle as I'm imagining?
Yeah, I think when you're a startup and your brand is not recognized in the beginning, it's very hard to do anything, right? Particularly when it involves financing,
Mm,
B2B financing in particular. I always had the questions: Are you a loan shark? Are you regulated? Are you all this kind of stuff? Which are the right questions, right?
sure.
But I generally am a very lazy person, right? So what I've been doing actually is actually just replicating the product offerings from the West and developed countries like Australia, America, and Europe to this part of the world and localizing it. So, and part of my network from the corporate days was, already in that B2B kind of business. And, I had relationships with some of
Hmm.
the distributors and already. So that definitely helped kick off the momentum. And also from a, startup environment, you gotta do what you gotta do or what you
Hmm.
can.
Yeah.
So like I mentioned, like my first kind of white label of my systems, which cost a lot of money, we white label for 15,000 ringgit, right? I mean, you will never find that deal anywhere else, right? So I guess I remember a good friend of mine challenged me. It's like, stop talking so much. Talk to me after you find that first customer, right?
Hmm.
And this is like the first few months I started. And I'm like, yeah, sure, whatever. First customer, easy. And it was a struggle, right? I think it took me a good year or so, right? Or maybe even longer to get that first customer after, convincing the customers of our product and so on.
Hmm.
So yeah, just persistence, just keep on going. And just not giving up, and somehow or another, whether it's luck or your network, somebody maybe pities you, they'll give you your first kind of project or sale.
Okay. And did the white label side of it end up expanding and becoming the predominant component, or is the P2P side a larger?
Yeah, I mean, we predominantly set out to be the funder, right?
Yeah,
But
yeah,
the
sure.
reality is we couldn't do that. Um, and we needed, revenue streams to pay for bills and all that kind of stuff.
Mm,
So we had to kind of get revenue streams from that until today. It's turned out to be quite lucrative. The margins are quite high on these kind of system integrated type of projects.
yep.
So we decided as a management to continue that business, right? But now we are definitely focusing alongside tech to also be a digital financier of the
Hmm.
supply chain. And our ultimate goal is to be a cross-border financier for ASEAN, right? For most parts of ASEAN, because there is a very big gap there, and there's not many solutions, even from the fintech space, to kind of fill in that gap.
And would that be off of your own balance sheet, or would that be kind of playing that kind of system integrator role as well?
Yeah, so currently we have various funders to
Mm,
support our programs. Some local players, some foreign players.
okay.
We are in the midst of setting up some funds of our own with some overseas institutions,
Okay.
America and of course in Europe as well, and Singapore.
Hmm.
So we're very excited. Again, like I mentioned, the next 12 to 18 months or 6 to 18 months is very exciting for us. There's a lot of new things that we're rolling out. And my belief has always been digitalize what works, right? So I
Yeah.
think the traditional world's financing was working. It was
Hmm.
just slow and inefficient. So again, leveraging off my previous relationships from my corporate world and my networks and all that, I'm just hoping to digitalize what is working in the traditional world, and of course improve it, and ultimately reduce that SME financing gap that we have across the world ultimately.
Yeah, definitely a big problem in Malaysia, a big problem in Southeast Asia, and really a problem all across. Um, I am curious because you have so much contact and network throughout this space. When your old colleagues and your old contact network saw you building up FinHero, did some of them come knocking and say, "Hey, let me white label, let me jump on, be one of the funders"? Because a lot of the traditional banks, they're trying to fill a loan book. They're trying to fill out their portfolios as well. And so have they come seeking and saying, hey, let me lend through you as well?
Well, unfortunately, they haven't come seeking. It's probably more of the other way, like me begging.
Well, that's
But
startup life in the beginning, at least.
yeah, but actually, ironically, is a lot of the traditional institutions that I had networked with after the pandemic or during the pandemic, they started to realize that, okay, we really need to digitalize our offerings. Otherwise, as simple as their staff couldn't access information during pandemic, now they see the importance. So a lot of that, I had to go back and beg them, like, can you please fund our deals and all that? But there's also a handful where it's looking at the tech. So naturally, how we build our revenue streams is we try to take the clip of every transaction, a small clip, right? And of course, when we set up our own funds and all that, that will increase our margins. So I guess a long, short answer is it's a combination of me having to beg and not them coming to me, but they're focused on the tech that we've built, particularly the credit scoring stuff we've done for SMEs. So looking forward to hopefully kind of white labeling our technology as well for some of the traditional institutions.
Okay. Let me jump a little bit further into the credit scoring side of it, because we talked about the OCR engine extracting the information. Without getting into too many of the proprietary details of it, which you probably don't want to disclose, what other inputs do you end up having, and how do you end up cranking out that information? I know we talked about getting the revenue and the cash flow information from like partnership with IP88, but from a traditional standpoint, is there any non-traditional data points, or is it really kind of simplifying how am I extracting the financial statement, the other sorts of numeric information?
Well, a lot of the scoring we're doing today is a combination of the usual stuff, right? Credit bureau information, which is old data, by the way. And we got to couple it with our technology, which reads bank statements and all that. So that's the traditional stuff, and to be frank, that's what we've been digitalizing for most parts of FinHero's lifetime. However, me personally, I believe that there's definitely a space that we can look at in terms of machine learning or even deep learning, right? When we look and analyze this data, when we crawl through the web, for certain qualitative data that frankly we have not factored in, but that's something that definitely we will do in the near future, because I think that's where the future is going to be, right? It's many more factors rather than just financials. I hope, for it to be as crisp as, when the weather changes one day, people don't pay you or pay you late or whatever. And that's the kind of behavior that we hope to see from the AI perspective.
Yeah. It does seem like there's been a lot more creativity going into credit scoring for personal lending as opposed to in the B2B space. B2B seems to be kind of much more traditional, hasn't evolved as much as you've seen on the personal side.
Yeah, for sure. And I don't have much experience on the consumer side, but for the B2B side, what I say is genuine businesses will pay. Right. So I think what we're trying to find out is whether this business is genuine. So hence all the program-based lending, because those are genuine businesses with historical trade. Where I'm really afraid personally, and what I've experienced in my career, is actually the syndicates. So the syndicates, they're very good at this, and they take a lot of time to build the financials and whatnot. And when they're ready, they'll do a clean sweep among all the non-banking institutions. Unfortunately, I saw that in 2022. A lot of my networks in the non-banking institutions got burnt by a couple of these syndicates. So to be frank, that's where I hope the technologies that we will build or building will be able to detect these kind of things. Because what the AI or machines can do versus the humans can't do is we can't absorb like hundreds of data points at one time. Machines, we can train it to do that, right? But also the trick of AI and machine learning is we gotta feed it tons of data, which at this point, we're getting there, but we need much more data. So it's definitely something we're going to develop and progress. I'm happy to say that we are definitely one of the front runners to be looking at this kind of stuff. I don't expect anybody in the market, particularly the legacy providers, to be doing this as well. And if they are, they're definitely not ahead of us. So, we have to understand that FinTech in general is still an evolving kind of industry. And we really need to be agile and see what works for us in the market the most efficient way. And technologies, particularly AI and machine learning, deep learning, there's so much to do for the financial industry. And I'm very proud to say that FinHero is right smack in the middle of it. And we have all the resources to utilize all this technology and bring it to the business world to reduce risk, and most importantly, also to provide necessary liquidity so business in the industry can grow from a financing perspective.
Yeah, absolutely. There's just so many data points, as you said, that AI can end up capturing. It has a better capacity to improve its decision making over time by recognizing what has happened and then updating itself. It may lack kind of the gut feeling intuition that has historically been in some of the finance trade, but I'd rather kind of solid data. Yeah.
And just to add one more thing, Kevin, is I'm very excited also from a technology standpoint, because like I mentioned to you, my ultimate vision is to provide cross-border financing for particular extended terms of some of the IT kind of purchases in the region. So because of the cross-border payments, technology, and all that we're working closely with some of the providers, that allows us to collect payments from various countries cross-border, which brings down the risk significantly. So even if you wanted to do this 10 years ago, it would not be possible, right? So I'm very, very excited and very happy to be in this part of this type of evolution in the industry. And I hope FinHero will be a big part of it and provide some awesome kind of liquidity program using advanced technology in the near future.
And how is it navigating some of the regulatory environment? Because in the early days, you mentioned that factoring in that wasn't necessarily. I'm not sure if it has become subject to regulation, but certainly when you start talking about some of the cross-border, there ends up being some more red tape that you have to go through, some stamps of approval and so forth. How has it been navigating that?
Yeah, so we're focused on asset-based lending, right, which is always a form of, leasing or invoice. So there's always some kind of hard asset behind the paperwork. So most countries in the world today, as long as it's a form of asset-based lending, the regulatory environment is less stringent because you're not technically lending money, right? It can be structured as a form of trading or of some form. So that's also one of the big factors of why we're focusing on the supply chain, because there's less regulatory hurdles because it's asset-based lending. Okay. So again, that's definitely a differentiator, because if you see a lot of the alternative-based lending today, the regulatory framework is quite heavy, i.e. P2P and all that, crowdfunding and all that. Yeah. Because they are, I think, SC and SECs around the world, they want to protect the investors. But because ours is B2B, it's asset-based lending, the regulatory hurdle is much less, right? But of course, the barrier to enter this type of financing is also much higher, because you got to have the networks and the know-how to navigate in the ecosystem.
But and you're looking at more the cash flow based, understanding the underlying asset, but more looking at it, comparing that to the cash flow base as opposed to being the more strictly collateralized that some of the ABL players out there have historically done. Yeah. So if somebody goes into default, you're not having to figure out, okay, how am I going to go pick up this piece of equipment and resell it, that sort of thing.
Yeah, so definitely. So again, because of our experience and a lot of the so-called financing that we do have some form of insurance.
Mm-hmm.
It's we collect from the sale, so it's relatively low risk. Unlike some of these alternative options in the market, which is lending to high risk profiles.
Yeah.
And unfortunately, if you see some of the default rates in some of these platforms are relatively high. And unfortunately, this is where I think the regulators need to do a better job. I think they need to be more transparent with that, because what I'm seeing with other providers is they're masking these defaults by terming it something else. And that's not very good for the investor base, I think.
Yeah. It's a misrepresentation, essentially, potentially. Okay, so let's talk a little bit more. You've referenced that it's going to be a very busy upcoming year and beyond, as a lot of different things start rolling out. So I guess you had mentioned an expansion towards Thailand. So I guess let me zero in on that and talk about, is it the cross border, or are you going to replicate the full model that you have here in Malaysia into Thailand as well, and that hopefully cross-border also is a part, or is it the key or the also?
It's a bit of both. So the strategic kind of expansions that we're doing will involve a local partner, because the environment we're in, B2B, you got to have the local presence to help with the local markets and also the regulators, right? But that also concurrently sets us up to help us mitigate the risk when we enter cross-border financing, right? Because one of the reasons why the traditional finances don't do cross-border financing is because of the recourse, right? If something happens, they don't have recourse. So when we are set up in multiple jurisdictions, we should have the recourse, so that brings our risk down significantly. You couple it with the payment technologies that we have access to. That definitely gives us a huge advantage versus traditional financing. So it's a bit of both. And also for Thailand, I'm half Thai. My mom's Thai. I speak Thai. Okay. I love Thailand. So naturally, that is a progression for me. Maybe some may say it's more of a personal want, but that could be it. But obviously, it's not only Thailand. We have aspirations for Singapore, Indonesia, Philippines, depending on the resources and the timing and our partnerships that we find.
Yeah. I mean, if it's cross-border, Thailand is a huge trading partner with Malaysia, so there's a lot of cross-border activity there. So there's certainly something there. But when you say having a local partner, are you talking about essentially looking at establishing joint ventures in each market, or bringing on somebody that ends up becoming a shareholder in the overall, but is essentially the country manager, or are you still kind of working those sort of things out?
Yeah, well, by default, it would be our preference to have majority stake of wherever we go to, but unfortunately, some of the regulatory limitations doesn't allow us to do that.
Sure.
So, like for example, Thailand, there's a limitation on foreign ownership at 49%. So naturally, we have to look for a local partnership. Again, I don't have a kind of one-size-fits-all answer to your question. It really depends on the local environment and the regulatory kind of requirements.
Okay. What do you see as the biggest hurdle in your way to accomplishing this? Is it the regulatory? Is it finding the proper partner? Or what is the biggest hurdle?
I think it's acceptance in the general market to understand that, we do have digital alternative financing options. Because if you look back in Southeast Asia, particularly in the past couple of decades, it's traditionally been the banks and unfortunately the loan sharks, right? That have been providing financing. So anything in between, you get the questions of who you are you a loan shark, are you a bank, and all that kind of stuff. So I think that's the biggest hurdle. Regulatory wise, like I mentioned, because we're asset-based lending, I don't think those are too heavy to kind of overcome. And again, because of our experience on our network, we should navigate the regulatory part quite easily. So to overcome the main hurdle, which I see as acceptance, is marketing and education. And I think our roadmap is to invest a lot in sales and marketing in the next 6 to 18 months to educate the ecosystem of all these options that we're going to bring to the market.
Okay, to try and establish that kind of trust factor, the acceptance. Who are you? Why should I go through you? Is it safe? All of those sort of like trust related questions.
Yeah,
okay.
Definitely. And also I think, to be fair, the regulators in Southeast Asia or most parts of what I see are trying to kind of support, right, the fintech space. The reality is the technology has moved way fast and forward, right, compared to the regulators. And I don't blame the regulators. It is what it is.
Yeah.
So I also I participate in a lot of the kind of government programs and whatnot, just to educate everybody, because we're only going to be successful if there's an ecosystem. And unfortunately, 5 years ago versus now, it's improved tremendously, but we still have a long way to go. And I think the key to success is working with everybody. It's a really big opportunity. And, like they say, right, if you want to go fast, go alone. You want to go far, go together. And I think, ecosystem play is a very important factor for the success of everybody.
Yeah, I think that's a fantastic point as far as the necessity of having an ecosystem and going at it together. Let me wrap up here with my couple of final closing questions that I ask everyone. And the first one of those is, what is a tech tool that you just cannot live without?
Tech tool, that could be hardware as well, right? I think it's gonna be my mobile smartphone, right? I think I can do a lot of things with that.
Yeah, always on the go. You're never away from the office, which is kind of a double-edged sword in and of itself. Yeah. Okay. Last question here is, if you were to talk to another startup founder that's just getting going, what would be your biggest piece of advice?
Right. So actually, naturally, I've been giving some talks to other organizations and interviews. What I always say, particularly in my space, the business-to-business space, there's a lot of people in the corporate world trying to come out and start up. My advice to them is never try and do both at the same time. It doesn't work. I tried to do it myself when I was working. It always ended up in failure or somebody cheating my investments. So my advice is, if you want to do a startup, make sure you give it 100%. I think, or else it's going to be hard to succeed.
Yeah, building a startup is incredibly hard, and like it's okay to like tinker as a side project, but if you want to scale something, it requires a lot of dedication. I couldn't agree more with what you just said. Yeah, I think the idea of moonlighting is essentially impossible.
Exactly.
Well, this is fantastic. Thank you very much for being here, Top Lim. This has been a great conversation and really exciting as we're seeing more developments in the fintech space and with what you're doing with FinHero.
Thank you so much, Kevin, for having me, and I hope to see you soon.
Excellent. All right, that wraps it up for another fantastic episode of the Sea of Startups. If you've enjoyed this episode, please share it with a friend. Go onto iTunes or wherever you get your podcasts and leave us a review. It's the best way for us to get discovered and to have these startup stories reach a broader audience. If you have any suggestions or would like to get in touch, you can email me at kevin@indelible.vc. As always, I'm your host, Kevin Brocklin from Indelible Ventures, and this is the Sea of Startups.